and eat. Yo, Fabi on the beat. Talking leadership, making the big plays in the mortgage game through the sun and the haze. Close more deals, build your success. Time to level up and beat the stress. Get ready to laugh, land and eat. Laugh, land and eat. Your weekly seat. Let's go.
Hey everybody, welcome back to another edition of Laugh, Let and Eat the podcast. And the gang is all here today. It's been a while since I've had everybody here with me. Normally it's just me and Justin's dog. But this time Justin is here. We have Mr. James Clyman on here from the Mortgage Scoop. And obviously, if the Scoop's in the studio, we have some breaking news coming on, right? Something's dramatic about to happen.
Yeah, so Rocket filed a lawsuit this morning in New York City. Basically, they want $100 million from UWM for allegedly basically harvesting the book that Mr. Cooper had either been sold or was subservicing on behalf of UWM.
So let me ask you, why New York City? Neither one, Rocket or UWM, is based in New York.
It's because the governance required that any litigation be in New York.
Because that's where the most expensive lawyers are.
Bobby.
Yeah.
Right. I mean, that's like you have about 15 lawyers and you're paying about $2 million an hour.
Sounds about right. Yeah.
Well, I'm sure they'll come to a nice settlement. Something will happen, right? And about 2 years later, we'll hear some kind of settlement happen, but they won't disclose the terms.
You know what I mean? I mean, these companies dislike each other so strongly, I could absolutely see it going to trial.
Oh.
But that would take about 5 years. It would take about 5 years for that thing to go to trial.
And how much money? Oh my gosh.
Yeah, I mean, the money just, Justin, you triggered me once we start talking about lawsuits.
Hey, this is all you. This was not me. This is James's fault. James brought this up, not me.
I get triggered, man. I get triggered.
Actually, Bobby brought it up.
Yeah. So, but I want to talk about UWM because you also wrote an article earlier this week. By the way, your website is themortgagescoop.com, right? So if you're not a paid member, fork up the money. I think it was $25, $30 a month. What was that?
$22 per month. And
if you know James, you see him at a conference, he'll give you a 10% discount just for hugging him. But you wrote something else about UWM, that they were going to have a cross-country type moment. Or was that somebody else that you were quoting? That UWM could see some kind of
you mean
thing?
Countrywide?
Yeah, like a countrywide moment happening at UWM.
So I was quoting, there's a pretty prominent industry analyst named Christopher Whalen, and he has a website called the Institutional Risk Analyst, and he believes that there are similar patterns at UWM as were seen at Countrywide back in the day. I don't personally agree with his analysis. And, I was just graduating from college at the time Countrywide really went bust, so I don't have as much firsthand experience as some of you guys who are still slinging loans back in the day. But UWM is selling almost its entire book of business to the GSEs, or it's insured by the FHA. There's about $6 billion per quarter in jumbos. The loan characteristics are not remotely similar to the Ninja products that Countrywide was promoting. And for what it's worth, back in the day, I have a lot of sources who worked at Countrywide, and many of them said that Angelo Mozillo hated brokers. So there's another irony to all of this. But look, you can dislike UWM and some of their business practices, and you can question whether operationally they have enough cash relative to the size of their operation, and whether they're even able to absorb, a servicer like Two Harbors. But I don't think you could argue that they're going to get margin called, that they're going to go belly up spectacularly and suddenly. I think UWM is hated by a lot of people, and so when they seem vulnerable, I think a lot of people pile on. But I just don't believe that UWM is is,
Now, if they did go under, I think Whalen wrote something that this would be very detrimental to the pricing that the wholesale mortgage brokers get on a regular basis.
That doesn't make sense to me. So I've looked at, pricing. I've asked about 10 different brokers to send me, when they're pricing out deals, and UWM is and has been for a long time nowhere near the top. If there were some sort of allegation that they were like
years ago, man, UWM was pricing below the market just to get rid of like Loan Depot went out of the market at that time. I know Annie Mac Wholesale shut down their wholesale division during that time. A number of people got out of the wholesale market. They just couldn't compete with the UWM low rates at that time.
Yeah, I mean, like strategically, they have been known to offer huge pricing discounts and to throw their muscle around and knock out other lenders that they feel are vulnerable in wholesale. And certainly there were a lot of people at some of these lenders who were unhappy about how UWM operated, but if they can produce a loan for, let's say, 30 basis points and your home point and you're at 70 basis points, like it says more about Home Point's operation to me, or, you choose the lender. That was just an example.
Yeah.
And so, but like they don't do that all the time. They have strategic initiatives, and right now their pricing is not even close to, and I feel like that's what makes them so interesting, that their pricing.
You don't think the wholesale industry would suffer anything? The brokers would also be having higher pricing and that kind of stuff.
I mean, look, they're welcome to use Dart. They're welcome to use.
Justin has a question that he texted me last night. He says we got to talk about this during the news clip. Go ahead, Jay. Justice, all yours, brother.
What's up with the Fed?
I don't work there. I don't know.
Fair. You dodged that question. This is not Capitol Hill, sir. You can answer. I'm going to reclaim my time.
Go ahead.
What's your predictions on what rates will do the rest of this year? We're going to have a rate increase this year?
Dude, I have no idea. Like I'm okay. So I am a gossipy bitch from New Jersey who writes like Gawker style stories about the mortgage industry, and I get good scoops, and I'm pretty plugged in. But I'm not an economist. I don't have any greater insight than your dog does, Justin. So I'm going to pass on that one. If you were to hold a gun to my head, I'd probably say, just based on where inflation is and how choppy the marketplace has been and the various geopolitical issues that we're experiencing, I think we're more likely to see a rate hike than we are a rate cut.
You did it, Justin. You got him on record, sir.
He said it. Mark the time. 20 minutes and 4 seconds. He said it.
Again,
Minnesota will now give up their time.
And I have no idea. So let's put that caveat on top.
Listen, I mean, the reality is that the market is going to do what it's going to do, no matter who's running the Fed. You got to follow the numbers. The numbers right now, unfortunately, they are what they are.
10-year is not looking great.
Yeah, I mean, no matter, it's like you can time the 10-year now, but anytime there's any kind of like possibility of this conflict in Iran ending and the Strait of Hormuz opening up, then all of a sudden oil prices go down. Bond gets, maybe I'll drop it 2 or 3 bips, and see what happens.
But that would take months. Like even if they open the Strait today, we're talking months before things stabilize. Yeah,
I mean, I don't think, look, we were all kind of getting giddy for 2026 come January, February. We saw that 5 3/4 as kind of like, okay, we're below 6. Now the giddiness is gone. I mean, it's like welcome back 2024.
Oh, what a horrible year.
Yeah. So, Jay, before we let you go, because we got just about 45 seconds. Is there anything happening in the mortgage industry that is concerning to you that you have a scoop on, or that you're seeing a blip that we're not seeing?
I'm seeing both a lot of interest in mortgage tech companies at the moment, probably because there's a fair amount of dry powder out there, and there are a lot of just institutional, private equity firms, hedge funds, various companies like that are looking for returns. I think they probably think there's good value in there, and there are a lot of those firms that are running out of runway on their current funding. Mm-hmm. So I think we're going to see a lot more deals over the next 6 to 9 months.
What do you think about lower.com? When you open up that can of worms with tech firms, I got about 10 seconds for you.
I think they have made a very ambitious play. I don't know that operationally they have shown the success that one would have hoped for at this stage. But I mean, they could be, they're vertically integrated and very few are. And if they can get their, costs down and get their lead funnel really humming, I think they could.
You were the one who reported that they lost a pretty big production to Atlantic Coast recently.
Yeah, like a huge, probably, I don't know, somewhere around $1 billion into production. Wow. Now they are still recruiting, but yeah.
This is my buddy Jamie Brown. So congrats to Jamie. He just became AVP over there at Lower. So that's why I wanted to kind of pick up that, make sure that Jamie's going in with his eyes wide open. I'll send him this clip and say, look what the Mortgage Group says. So anyway, all right, Jason, look, I'm going to let you run. I know you got kids to take care of and some other gossip to go bitching about. So, all right, brother. Thank you so much, man.
Yeah.
See you later. Bye. All right, Justin, I have a good news for you, man.
What's that?
We got through the news in just about the right amount of time.
All right.
We're doing good. We're doing good. I want to put on some badass music here, though, because we're going to have a badass guest come on. And this is what I got to tell you something. We get a lot of guests here every year, right? I have to tell you, the next guest blew my mind when he was on here a year ago. And I was just so excited to get him back on. I was like, this is like a free coaching session for me. I hope you got your cap on. I got none other than one of the most top workers in the industry, Mr. Vermillion. Dale, how are you?
Yeah. Hey guys, how are you?
I mean, how that last conversation we had a year ago, man. Your son said, you've been schooled by my dad. I was like, absolutely, and I will take that all the way for another 364 days.
It's great to be here, Bobby. Love being with you and Justin. Thanks for asking me to come on.
No, I mean, listen, you are, like I said, I mean, I don't feel like there's certain people, and you're one of them, that I don't feel like I need to introduce. Like, I don't need to tell everybody your accolades. I don't need to tell everybody how many things you've done in this industry, how many people you've helped, how many people you've coached and mentored and freely given of your time. It's like, if they don't know Dale Vermillion, I always say that I feel bad for people. Like, what are you doing in this mortgage industry? What's wrong with you? Like, even before I talked to you, I knew who you were.
Well, it's been a fun ride. I mean, 43 years of doing this, and 31 as a speaker and trainer, and God has just opened a lot of doors, and I'm very grateful for that. And love this industry. Love helping companies and originators and consumers. And you know what? We do a great thing in this industry. We provide the American dream. We impact people's lives in a powerful way. So it's an honor to be part of that run for the last 4+ decades, and certainly an honor to be here today. Appreciate you having me on.
Thank you, man. Well, there's one person who had not heard of you in this entire industry, and that person is sitting there, Justin Neal.
Not true.
And so
not true.
Well, Justin, it's good to meet you.
It's nice to meet you as well.
Now, Justin only got in the industry like 25 years ago, so I probably that's the reason he hasn't heard of you.
You guys are both in the 1900s. I'm in the 2000s, so different class. I was a younger class, younger generation.
So listen, we have a ton of questions for you, Dale, but right now you just heard kind of what we talked about the term the Fed got a new chairperson yesterday.
Yep.
Brian Wersch. We don't know what the rates are going to do. We don't know. I mean, and there's a lot of anxiety, right? There's a lot of unknown. People are wondering, like, am I in the right industry? Right? Yep. And I think your message comes at the right time for us this week. So what do you think what you're seeing right now?
Look, as I mentioned coming in, I've been doing this game for 43 years. If rate mattered, I wouldn't be sitting here today. Okay. I think the thing we need to do is we need to just take a breath. We need to pause. We need to remind ourselves. Okay. People are going to buy homes, and people need to save money no matter what rates are doing. That will never change. And that's the mindset you have to have. Look, I started the business when rates were 17.5%. That's what I was selling. And I was closing 30+ loans a month doing that. Okay. I worked and managed teams and ran companies where our rates were 15 and 12. And I had loan officers closing 40 loans a month doing that. today, I look at the market. I've got clients that you just mentioned 2024 a little bit ago. I got clients that had their best year in 2024. It's not a product of what the market's doing. It's a product of what you're doing in the market. That's what's going to drive your success. And it begins with your mindset. If you go in thinking that people aren't going to buy because rates are high, then you know what? That's exactly what's going to happen, is you're going to end up with exactly what you thought was going to happen. So we need to talk today about how do you manage yourself, and how do you run a business, and how do you run your own personal business in this marketplace? And the answer is you don't focus on price, because that's a conversation nobody wants to have. You focus on what you're going to do to help a consumer change their life, whether that's buying a home, whether that's helping them create affordability, whether that's helping them to refinance and lower payments and get access to cash and utilize the equity. There's a lot of good things in the news that we don't tend to talk about. The media definitely doesn't. We can talk about some of those things today, and what are some of the positive things happening that are out in the marketplace. Because at the end of the day, if you don't change your thinking and you go in with the wrong mindset, stinking thinking ain't going to help you to get where you want to be. That's all there is to it.
I mean, it always comes down to mindset, Dale. That's to me, it's never been anything different than the mindset. And this is I think we can shift a little bit here, where this is something that no matter where you are in your career, you control your mindset. Nobody else can control your mindset for you.
You do. And you got to tie that to your activities and your behaviors. It's attitudes and actions. It's beliefs and behaviors. Those are the two things I have trained for 40 plus years. And those are the two things that make all the difference. At the end of the day, we're all in the same bucket. We all got the same rates. We all got the same challenges, and we all got the same customers. The question is, who's going to win them? The one who's going to win them is the one who does the best job with those customers, creating the best experience, with the most benefits, with the best service, and with the most integrity. That's the answer.
Well, look, I was going to try to share this chart with you guys, but JP is not here, so I'm not going to even try to share this, but I want to share some numbers with you. How's that? Please. We just got this last night from my buddies over at Ingenious Data, Jeff Walton and those guys. I have been sucking this information up. I'll make sure you guys all get it later on. But right now, what you have is 30% of the top loan officers in 2025 did 71.5% of all the business.
Yep.
The top 30%, right? But then I went one step further, Dale. I said, okay, if the top 30% did 71, what did the bottom 30 do? And that came out to about 5.5%.
Right.
So then you got 40% fighting for about 24% of the market. And I'm like, hold on, man, this is crazy. Like, I never looked at it this way. The 30% on the top end keep getting bigger and bigger. They keep doing more and more. How are they doing more if they have the same rates as us?
Yeah. So let me give you some answers to that. And let me remind you that shouldn't surprise any of us, Bobby. The 80-20 rule has been around for as long as I've been in business. And the 80-20 rule simply says that 80% of your production comes from 20% of your sales force. It's just been exaggerated a little bit, where now that's a 30-70 instead of an 80-20. That's all it comes down to. So look, the people that are at the top of that scale, those 30%ers, they're not doing anything different other than they're doing more of it. That's really what it comes down to. So the difference between top producers today that I see in the market and everybody else is their level of activity. That's the number one thing that is making the difference. They're calling their database every single day. They're prospecting for realtors every single day. They're diversifying their referral partnership portfolio every single day. They're not the ones who are working from home, waiting for it to rain money like it did in 2020 and 2021. They're out there making it happen. I've always said there's three kinds of people in the world, Fabi. There's those who make things happen. There's those who watch things happen. And there's those who say, what the heck happened? Okay. Well, that bottom tier is the what the heck happened. That middle tier is the what happened. And that top tier is the make it happen.
I got to jump in and ask. I have to ask. I mean, so if I'm in the bottom or middle tier, I'm hearing you say mindset. I believe in that. What do you tell me as a loan officer in that bottom or middle tier to change my mindset starting tomorrow to become a better person of myself, a better version of myself?
Yeah, it's really this simple, Justin. Look, let me say something profound here that you need to understand. The only reason I've made it 43 years in this industry is because I didn't know I wasn't supposed to. That's simple.
That's a t-shirt, Fabi. That's a
When I
t-shirt.
started back in 1983, rates were 17.5, and my boss said, just go talk to people and just tell them you're going to save them money. Don't worry about talking about all the other stuff. And that's how I learned the game. At the end of the day, what you have to understand is you got to quit worrying about the things that you don't control and focus on the things you do control. And what we control is our actions and activities. And look, putting attitude aside for a minute, okay? If you don't have the right attitude and you're concerned, then here's what I'm going to tell you, the most simplistic answer to your question. Keep reminding yourself every day when you wake up. Rates have gone up and down for decades upon decades upon decades, and yet people keep buying homes, they keep refinancing, they keep borrowing against their equity. Those things never changed. Yeah, the numbers go up and down a little bit, but the originator numbers go up and down with the market. So when you look at the comparison of originator to production, it's no different today than it was in 2020 and 2021.
Yep.
We had a lot more volume, but we had a lot more originators. So your share of the pie was still the same, and those percentages didn't change. So what you got to do is get up and go, look, people are going to buy. Mm-hmm. I just got to show them how they can afford to buy. That's my job. And show them how I can get them in a home that makes sense for them. And people are going to need to save money, so I got to show them how to do that too. If you get up with that mindset and then go, you know what? So now I'm just going to start calling my database. I'm going to start calling on realtors, and I don't care what their answer is. I'm not tied to the answer. They can say yes or no. I don't care. If they say no, then the next one's going to say yes. And if the next one don't say yes, then the one after that's going to say yes, because every no gets me closer to that yes. That's the mindset you have to have.
Bobby, there's some parallels there between that and recruiting, isn't there? As I'm hearing him talk about this,
it's identical. There's
hand in hand the same.
It's always going to be the same. But I also want to say one more thing, Dale. I think the top 30%, and maybe even some of the middle 40, you know what I mean? But definitely the top 30, they've created a process. They're not in the weeds. They have a team. They trust people. They're delegating certain duties, and they're just like the 80-20 rule that applies to them also, where they know that 20% of their energy is bringing 80% of their revenue, so they need to optimize that 20%.
Yeah.
So I think there's something to be said for creating the process, Dale. I mean, what do you think about that?
Well, there's no question. I mean, you got to remember, our company is Mortgage Champions. We work with, I've trained over 800 lenders in 31 years and almost 2 million originators in that period of time. And we're working right now with about 30 different companies across the nation, okay? Those companies, all of them are in that top 30%. I don't have a single client who's not in the top 30%. Most of them are in the top 3%. Mm-hmm. Now, why? Because we teach a system of selling and a system of leadership and a system of operations. We teach a process based on those 31 years of coaching millions of loan officers and just using the best practices that are from top producers that get the numbers done. You have to have a system in everything that you do. You have to get up in the morning and know what it is you want to do, you're going to do, and then you got to go do it. That's really all it comes down to. The problem with the people who don't succeed in the market is every day is an adventure for them. It's like walking through the jungle. They're moving the leaves. They don't know what's behind them. It might be a lion that's going to eat them, or it might be a beautiful pond. They don't know because they don't have a process and a system. You got to understand, this business is built around having a system that allows you to walk through the sales process to the end. Mm-hmm. And what is in that system? You got to create value for your borrowers. You can't start your conversations, Fabi, by talking about how bad the market is, how high the rates are. This is literally what most originators today are doing. They are loves company with their realtors, with their builders, and with their borrowers. Oh yeah, you're right. It's so bad, man. Rates are high. But, well, if you just said that, why do I even want to talk to you anymore? What are you saying that entices me? Instead of saying, hey, you're concerned about the rates. Let me just tell you all the good things happening in the marketplace and why you want to buy today Frankly, it's a buyer's market. We've been waiting for a buyer's market for over 10 years. We finally got one. You're in perfect shape. Let's talk about things like seller concessions. Let's talk about inventory. Let's talk about 34.22% average reduction in listing prices today. Let's talk about those things, and let's show you how to get into a home that you love. It's that simple.
It really is. I mean, and I want to talk about the bottom 30% day. I know we don't normally do this, you know what I mean? But I do want, I when I saw these numbers and it was like perfect timing, right? Jeff sent me this last night. I can't go to sleep all night because I'm just thinking about all these amazing things that I'm now going to start doing for my recruiting to make Annie Mac a little bit bigger. And I'm like, oh, Dale's going to be on the show. I just really, this is perfect timing. The bottom 30, right? The guys that are doing 5.5%, 30% are doing 5.5% of the volume. Right? I label them as give me the best rate, give me an LOA because everyone else has one and I can take my production from 2 units to 8 units overnight. How realistic is that?
It's not at all. It's not going to happen. Look, I want to be as kind as I can here and not offend anybody. You know, Fabi, you know my background, you know my mindset. Our whole company's built on what we call the others first principle, which is based off of Philippians 2, 3, and 4, which is my life verse. Do nothing out of selfish ambition or vain conceit, but in all things with humility, value others above yourself. Look, I'm going to be very blunt right here and very direct to the bottom 30%. Because I love you as a human being and I want you to succeed. Just start working. Make a decision today that you're committed to this. The biggest problem with the bottom 30%, because I see them all over the industry. I'm training tens of thousands every month across the nation. I speak at every conference you can speak at. I meet these people every day. And the problem is they're not committed to this as a career. They want to do it as a gig job in a gig economy. They want to throw out some online links to borrowers to have them complete their own applications, never build a relationship, never create a value proposition, shoot them off a offer via email, and think they're going to buy. Why would they buy from you? That doesn't make any sense. Remind yourself of this important truth. A mortgage is the single largest financial decision a human being ever makes in their lifetime. There's none bigger. This is not like buying a product off Amazon, okay? It requires an advisor. It requires somebody you trust. It requires somebody to educate you and guide you through the process. That's what great originators do, is they do all of those things. So my advice to those that are in that bottom 30% is get up and go do stuff. Go call on realtors. Start talking to customers. Start networking. Get involved in a BNI group. Go do some open houses. You know, call your database. These are the things that the top producers do. There's no magic pill to success. Talent isn't what determines success. Work ethic, belief, and systems are what create success. And here's the key. Here's the biggest key in the game today. Let me tell you the biggest problem in our industry today that I see by far. We continue to move more and more and more towards technology. We're doing online apps, we're doing emails, we're doing text messages, we're doing DMs. We're not having conversations with borrowers anymore. And we think if we just flood the market with offers, we're going to magically win deals. You can flood 100 offers and not close a single loan in today's marketplace because you're living in a world where the borrowers also have technology and they've got at their fingertip 1,000 quotes they can get right now on a mortgage loan in seconds flat. So what you've got to do is understand relationship is the key today. You got to be high tech, but you got to be high touch. You can't be just high tech. Those originators are failing miserably today. The high touch ones, Fabi, this is God's honest truth. I am working with loan officers that are closing between 50 and 80 loans a month.
Jeez.
In today's marketplace, okay? These people are the most relational, friendly, kind, compassionate, conversational people you're going to meet. That's why they're closing so many loans. They don't send online apps. They have a conversation with their borrowers. They don't shoot a pre-approval to a realtor. They call the realtor up to tell them about the pre-approval and make sure that they have that conversation with them. If you want to convert, you have to converse, as I always say. It's
Wow.
that
Okay,
simple.
so I got to jump in. So I'm hearing you talk about this, and I believe you. So if can you be both? You have to be both. You're saying you can't be
You
just
do.
one or the other. Okay.
Yeah, the technology creates the efficiency and creates the simplicity so you can scale your business.
Okay.
So you're not doing those tasks that technology can do that are not money-making tasks.
Gotcha.
The
Okay.
relationship has to be there. You still got to take time, spend time with your borrowers.
Gotcha. Okay.
That answer your question, G?
Yeah, that's fascinating to me. I mean, we all know producers big and small, and I think what I'm taking away from this so far is mindset matters, and also be open to. I know many loan officers who are low technology, high touch, and they're kind of capping themselves because they simply spend all their time on the phone, as they should be, but there's only so much time in the day to get their job done. So embracing both is a way to get yourself 2x'd.
I think the miss. Sorry, go ahead. Go ahead.
Go ahead, please.
No, go ahead, please. You're way more smart than I am.
Let me give you something that is the most simplistic principle that I have taught my entire career, and it blows loan officers' minds every time I do it. So I hear all these loan officers that they say just what you said. Oh, I'm so busy. I got so much going on. I don't have time. I don't have time. I go, okay, stop right there. How many loans you closing? They go, I don't know, 2, 3, 1, 4. I go, okay, all right. So you're so busy on your 2 or 3, 4 loans. Let me ask you a question. Would you like to close 15 every month guaranteed? And they're like, well, of course. I'm like, would you like to do it and not be so busy? They're like, how could that possibly be? I go, it's simple. Let me define for you how you get to 15 loans the simple way. 1 sale a day. That's how you do it. 1 sale a day. Now, let me define that so you understand it. If you can find one human being, one consumer a day who will give you a mortgage application, either a refi app or a purchase app, and you can get them to complete the app, agree to give you their documentation, agree to sign an intent to proceed, agree to let you move forward on the pre-approval or on the application to order appraisal and title and get going, you will put 20 deals a month in your pipeline on average, because there's 20 average business days in a month. Traditionally in the mortgage industry, we close 75% of the deals that go into pipeline. So now you do the math, 20 times 0.75 is 15 loan close. New math, old math, it don't matter. It all comes to the same number. So here's what you need to do. Slow yourself down, spend enough time with the borrower where you earn their business that they'll do all that. Spend an hour with them instead of 4 minutes like you're doing today with 20 people, none of which buy. Spend 1 hour with 2 or 3 a day, and you're going to get at least one of them to buy, and you're going to crush the numbers, make a ton of money, be on that upper 30%, not lower 30%, and you're going to be a happy person.
All right. I got to throw this out there, Dale. The biggest miss I see my loan officers doing, and I'm sure industry-wide we see this all the time, and I've talked about it over and over again, is no follow-up.
Right.
Right? Like, Dale, I sent out my pre-qualifications. I'm just sitting here now. I mean, I got 20 pre-qualifications out there, Dale. Where's the 75% that are going to call me back and say, Fab, I'm ready to go forward?
Yep.
Right?
Yep.
So how do you build that kind of like, it's almost like building a new muscle to do that follow-up? Like, you're going to call back 8, 10, 12, 15 times maybe, and it's okay because that's called follow-up.
Yep. So, Fabi, let me ask you a question. Why did I show up today here? Besides the fact that I love you, what is the reason I showed up today?
I would say, well, there's a couple of reasons, but I mean, I'm sure it adds that into the follow-up.
I'll tell you the easiest reason. The number one reason is because it was in my calendar. That was the number one reason. When I came in this morning, I looked at my calendar and Fabi was on my calendar at this specific time because I planned out my week like everybody should. Do you know that most mortgage loan officers don't even use a calendar?
Yeah.
When I ask them, can you show me a calendar? Like, well, I don't really use my calendar.
All up here. Yep.
How in the world do you get anything done if you don't use a calendar? Yeah. So here's the answer to the question. Plan for your follow-up. So I'll give you some real simple tips here that are profoundly powerful. Your pre-approvals, there's 2 calls you should be making every week to all your pre-approvals. Your Friday seed call. That's at 2:30 in the afternoon every Friday. You plan an hour. You call every one of your pre-approvals, and you're calling them up for one reason. Hey, Fabi, it's Friday afternoon. Weekend's here. Go find a house. You're pre-approved. Go find a house. I'm going to call you Monday morning to see how it went. If you need anything, call me. Okay.
You got one job.
I call you at 8 a.m. on my follow-up call. That is my status call. So, Fabi, how'd it go? Did you find a house? Now, here's what this does. Not only does this get you moving faster to actually get a contract and buy a home, but what it also does, it cleanses my pipeline. If you all of a sudden say, oh, you know what? You don't need to be calling me, twice a week. Yeah. What did you really just say to me? You're really not even a serious buyer.
Yeah.
This is what happens is we take applications on people who aren't serious. We get them pre-approved, spend all these hours to do that. Then we don't follow up or hold their feet to the fire. And our pipeline becomes a pipe dream. That's not what we want to do.
Yeah. Listen, mindset. Let's go back to mindset. Why doesn't every loan officer have the mindset to follow up? Then if it's so simple, Dale, is pick up the phone on Friday at 2:30 and then pick up the phone again on Monday 8 a.m. What's the missing thing? Is it fear? What is it?
It's that they're all working from home post-COVID, and they're walking their dogs, and they're going to the park, and they're going to the gym, and they're working on their gig side job, and they're spending hours on social media trying to become an influencer when only 1 in a million makes it. These are the crazy things I see every day when I talk to loan officers. I'm like, tell me what you do. And when I hear their schedule, I'm like, no wonder you're not closing any loans. You are dedicating almost no time to your trade, but you want to have the money that comes with being in this trade. If you're going to be in the business and make millions of dollars or hundreds of thousands of dollars, it doesn't come without a price of time. You got to invest is what you got to do.
Did COVID ruin this? Are we still riding the coattails of a COVID fantasy?
We are. Oh my gosh. Yes.
It's been 4 years, 5 years.
I know, but that changed a lot of things. It changed our thinking, it changed our mindset. It changed the way we communicate. I mean, even the fact that we're online right now. I mean, Zoom was not even a thing before COVID. Yeah. Now we're on 20 Zoom meetings a day, every day. Yeah. I mean, it changed everything we do. And the work from home concept, hey, look, I'm all for having a balance in life. I will never tell people I expect you to work 100 hours a week, 80 hours a week. If you're working more than 50 hours a week, you're just simply doing it wrong. That's all there is to it. I train loan officers every day to work no more than 50 hours and pull down massive amounts of income in doing it, and spend time with their families and get to know their children and love on their spouses and take care of their parents, because that's what we're called to do. So you can have both of those. But again, here's the key. When you go to work, you got to work. You can't be distracted all day long. You got to build a relationship. You got to have a plan, and you got to put that plan into action in your calendar. You got to build yourself a template every day that says, these are the things I got to get done, and I'm doing them. And you'll win big.
So this has got to be the biggest distraction, right?
It is.
We all walk around with this. Like it's the minute you wake up to the minute you fall asleep. I mean, this is like, and I see often in at the workplace where guys are, texting or whatever. And it's like, and I keep telling them, like, if you're texting somebody, maybe a spouse, maybe whatever, right, about what's for dinner, or I'm really mad at you about what you did last night, you just sucked up your mindset. You got to restart the whole day all over again.
Exactly right. Here's an interesting thought. So I do teaching on time mastering all over the country, along with sales skills and all the other stuff I do. And I read a study years ago that was mind blowing. Okay, here was the study. So, those little email pop-ups that we get on our computer all the time? Got an email coming in from a person. Okay. Do you know how long of a distraction those are? They're 12 seconds. I thought they were 1 second. They're 12 seconds. So I get like 400 emails a day. All right. If I'm sitting with my computer on and I keep my pop-up on, I'm going to get distracted 400 times for 12 seconds a crack.
Jeez.
Nobody has time for that. So what I teach people is shut your pop-ups off. 100%. Build time blocks in your day. Turn off your smartphone. Okay. You can survive an hour without it. Trust me. Put it away. Work on what you're working on for an hour. Take a 5-minute break. Open up your smartphone. Check your email. Now 5 to 15 minutes, you can clean all that stuff out and go back and do it again.
Yeah.
Do another hour, then go back and do it again. Do another hour. You'll get 6 to 8 great hours of work in and still handle all the other stuff that you need to do because you're time blocking. That's the key to the game.
You know what's funny, Dale, is so for my prayer service, I used to bring my phone and all that. And then I stopped bringing my phone in, right? Because I realized one day that I don't take my minister and I don't talk with him when I'm working. So why should I bring my work to when my minister is talking?
That's right.
And I literally so whenever I'm doing something important, this phone is not anywhere within my. I know it sounds so like, oh, Fabi's just old, and it's not. It's like I need to focus. Right. I don't need any distractions coming in because right now the most important thing is whoever's sitting in front of me, and nothing else matters.
No, I think Fabi lost his phone again. That's what that was. Old man Fabi lost his phone.
You know, that happened to me in Pakistan, by the way. Someone stole my phone in Pakistan, and I was like, it's okay. And all my brothers were like, oh, you want us to go get it? And I said, no, let it go. I don't want it. I don't want it around me. I can have 3 weeks without it. I'm okay. Let's see how this goes.
Hey, we made it a lot of centuries without any of this stuff, and we were just absolutely fine. We raised 4 kids, my wife and I, during the time when there was no cell phones, and we were absolutely fine. Look,
maybe better.
These are just the things that have created the problems in the market today.
Yeah, I think we can talk about this in another time, but I do believe that like to me, it's distractions are the number one killer, and then we feel like we're still busy, and I think that's where that whatever's going on is like when people come home, they're like, man, I had a rough day. Okay, what'd you do? What did you accomplish? Did you get done everything? You don't understand. I was busy.
No, we're busy. We're just busy with the wrong stuff. I mean, it's if you're going to be successful, you have to identify what are the things that you do that create the money-making activities that actually fund your life, and make those your priorities. Have a priority-based mindset where you come in the morning, you establish your priorities, and you say, these are the things I'm going to get done, and I'm going to time block them in. And I'm not working on other things during those. Nothing trumps these. And then create for yourself a 3-hour cushion in your day for all the other stuff that's going to come up that you got to take care of. You can get to it, but you don't have to get to it right now. Get that loan sold, get that application taken, get that deal closed. Make those phone calls to your pre-approval customers. Make sure you give your updates to your realtors on their files. Time block the important things out, and you'll get so much more done. You'll make so much more money. You'll be so much happier. And you'll actually, when you're actually done, then you can actually enjoy your family and not be burdened because you're making money and you're doing the things you need to do.
Yeah. I
Hallelujah.
It's so connected, but I just don't think people see it, Dale. And I want so badly for everyone to succeed and make as much money as possible. I really do.
Me too.
And that's been one of my things in this. Like, I just want to help people, but this, and I want to end this here. Is there are certain percentage of people that there's nothing I can say that's going to penetrate their heart.
Yeah.
Yeah, unfortunately, a lot of times what you find is the only thing that's going to work is pain, unfortunately. And that means they're going to have to fail in order to realize that what they're doing isn't working before they're going to be able to succeed. I pray and I hope that whoever watches this podcast, that we said some things that struck a chord. They're like, you know what? I don't want to wait for the pain. I have control over my life. Yeah. I can make these changes today. It's nothing more than a matter of discipline. You create habits by disciplining yourself to, extract away from the things you're doing wrong and start take on the things you should be doing right. And if you do it enough times, pretty soon, before you know it, that's your new habits and that's your new life. And that's where we want people to get to.
I want to share real quick. Our industry is full of ADHD people. This is a great advice for those people. All that you just said, great advice for the ADHDers out there.
No, I think, look, I mean, this is why I knew it was time to get Dale back on the show. It'd been a year, and I needed a reset on my mindset. And, I'm ready to go ahead and start recruiting again, man. I got about 100 people on my list I'm going to be following up with this between today and tomorrow. So I'm ready. But, Dale, people want to get a hold of you. What's the best way, Dale?
Look, I'm easy to find. DaleVermillion.com. You'll find me. Put my name into Google and it's going to show up. I guarantee it. So it's not hard work. We're Mortgage Champions is the name of the company. So if you want to reach us there, or that's the way to do it. Or reach out to my son Jake. Jake's all over social media, so everybody knows who Jake is.
Yeah, Jake will make you feel good about yourself.
He will. He's an awesome dude.
Jake's a good guy. It was fortunate meeting him. So anyway, listen, we are out of time. I promise you we're going to end this show on time. Thank you, Dale. Love you, brother. Thank you so much. All right, guys.
Love you too, my friend.
Make sure you check us out on YouTube channel, subscribe, like, do whatever you got to do, but get on the YouTube, because these facial expressions you don't get to see on Spotify and Apple Podcasts. Go on YouTube, because to see Justin's dog explain the market to us at the Federal Reserve was priceless. All right, guys. Thank you all. Check out. Bye-bye.
God bless.
And
Talking leadership, making a big plays in the mortgage game through the sun and the haze. Close more deals, build your success. Time to level up and beat the stress. Get ready to laugh, land and eat. Your weekly scene. Let's go.
all right, guys. Thank you.